I asked you all your favorite type of trading strategy, and by a large margin, most of you said continuation trading, which is good because this is also my preferred style of trading. Continuation trading, meaning, of course, that we are looking to buy high and sell higher. So in today's video, I'm going to teach you 3 secrets that I have learned in my 10 years of trading to build profitable continuation trading strategies that work across multiple different tickers and across multiple different time frames. Each step is going to be comprised of multiple parts because in today's video, we're going to talk about how to find continuation setups using the chart, using scanners, and then using fundamentals. And wasting no time, step number 1, of course, will be how to find continuation setups using the chart. So we're going to talk about a couple of different indicators that I use, as well as some price action setups. So let's talk about the strategy that is running on the chart behind my head here. This is my runner's large cap continuation swing trading strategy. That's a mouthful, I know. I probably should come up with a better name, but that's what I called it. Anyway, the indicator that I use for this strategy, and I do use a couple of them, we're going to talk about some more, but the one I utilize for this strategy is called the percent change. Now, whenever I begin talking about indicators, I'll actually expand it here a little bit. People oftentimes kind of immediately want to run away. Oh, indicators trade, they're lagging, they don't work, they're no good. Guys, indicators, well, let me preface with this. There are some indicators like that. Yes, I agree. But there are also indicators that are literally nothing more than price action just in an equation, right? For example, this percent change indicator, all it is it's measuring the difference in the opening price of the current candle from the opening price of the candle 14 bars ago. That's it. It's simple price action. It's just giving a real value to that price action. And having a value like that is imperative for building, optimizing, and testing strategies and whether they are actually profitable over time or not, because you need real objective reasons for why you enter and exit trades, right? You can't just say, I'm going to buy a stock if it's strong. Okay, that doesn't mean anything, right? You can't prove that works without having a real value behind it. So the value that I use here on the percent change indicator based on the opening price is that if that value is greater than 5 for 3 bars in a row, that is when I enter this trade. So it is proof that the stock has been strong for multiple bars in a row, and it's doing that in 2 different ways. Of course, remember, the percent change indicator is measuring the difference in the open of the current candle versus 14 candles ago. So already the stock is like on a move, on a run, but doing it that it must be true over the last 3 bars means that that run is continuous as well, right? Like it's not just like the stock just spiked and we want to go buy it. No, the stock has been consistently strong for a handful of bars in a row. That is when I look to enter, and that is indicator number 1 that I make use of to help identify good continuation entrances. Before moving on to even more ways you can identify good continuation entrance setups, I just need to let you know that if you are interested in that trading strategy you just saw running on the chart behind my head, it is available alongside over 150 plus other custom thinkorswim coded strategies, studies, stock scanners, etc. over on my website daytradingstrategies.net, which will be linked in the description down below this video. And right now I am running my largest sale ever. So whether you want to sign up for the monthly or the annual plan, getting access to that Discord channel as well, if you use coupon code SUMMER at checkout, you're going to save 40% off of your first payment. That brings the annual plan down all the way to just $240 for 12 months of access to the already existing codes on the website, and obviously anything I add over the next 12 months, which is ridiculous. So if that is interesting to you, daytradingstrategies.net, linked in the description down below this video. Go check it out. Go take advantage of the free codes. Go read the reviews while you're over there. Help decide if this is something that could help accelerate your personal trading journey. The next next indicator I want to talk about to help us identify statistically higher likelihoods of continuation entrances working out is another very simple price action one. It is the simple moving average, which simply measures, I've said simple 3 times in 3 sentences. I understand the irony in that, but it simply measures the average closing price over the last X number of bars. What I'm going to do is I'm going to set that X number of bars to 200, and I run this on any chart I'm looking at, and I can easily identify when I should be looking for long opportunities and when I should not be looking for long opportunities. Now, we're looking at the Nvidia daily chart, which is basically always bullish. Let's go look at something like SPY. When above the 200 simple moving average, be looking for opportunities to go long. When below, don't. Don't try to time any of this business, because what ends up happening, beginner traders end up looking at a dip like this and they go like, oh, well, I could have just bought here and made so much money. Yeah, right. Of course, in hindsight, but what would have happened in real time is that you would have tried to buy here, right? You would have bought here or you would have bought here, and you would have ended up getting stopped out on the way down. Just wait. And when I'm having this conversation, I'm talking about active trading, right? Not investing. Investing being you're going to hold for a minimum of 12 months. In that case, yes, buy strong stocks as low as you can get them. That's a different conversation. For active trading, like a couple of hours or at best a couple of days, weeks long hold, you want to be having the trend already going in your direction before you attempt to make that purchase, especially on topic of the theme of this video for a continuation type strategy. Buy the strength, don't attempt to buy the weakness. So turn the 200 simple moving average on one of the charts you're looking at for the ticker that you're analyzing, and just ensure, if you are a buy high, sell higher type trader, that at minimum you are currently trading above this line. The third and final chart setup we're going to cover before moving on to the scanners and fundamental steps of this video is going to be literal price action, right? We've talked about 2 studies that are based on price action and plugged into equations. Now I want to talk about real price action, meaning breakouts occurring on the chart and how we can build a value to identify that. To do that, we are going to build our first custom code in today's video just to show it off. So in my studies tab here within Thinkorswim, I'm going to click on create, and I'm going to change this plot variable to a function named highest. Highest accepts 2 parameters, the first being of data. I want to see the highest high value, the second parameter being a length out of the last 10 bars, and I'm going to offset this value by 1 just so the current bar isn't included in the calculation. That's just going to make it so we can see when the current bar is breaking above this line. If I hit OK and apply, you will see now plotted on the chart is the highest high value out of the last 10 bars. You can start to see how this can be helpful for identifying continuation breakout price action type setups. When this line begins to move up, it means that the current price of the ticker is trading higher than its highest high value out of the last 10 bars. You're beginning to get a breakout. The stock is starting to show strength in its price action, in its chart. I'm going to take it a step further, though, to clean this up and to make it look even better. I'm going to wrap this highest high value in a lowest function. The lowest function, just like the highest function, contains 2 parameters, the first being of data type. We will do the highest high value out of the last 10 bars, and I'm going to look at that with my second parameter being length over the last 20 bars. So essentially now we've just wrapped what was, we're pulling, right, the highest high value out of the last 10, but now show me the lowest out of the last 20 of that highest out of the last 10 value. If that doesn't make any sense, I apologize. That's the easiest way I know how to explain it, but look at how the chart looks now, right? So pulling that lowest out of the last 20 bars, highest high value, we can really now clearly see when the stock gets up and above this line, hey, strong price action. The stock is breaking out. Let's get interested in potentially taking some continuation trading strategies on this thing. So there is a real live example of just using nothing but price action. There's not a single study used in this calculation, in this plot on the chart. It is pure price action. And this is the third and final, I won't say final, but my top 3 ways that I like to utilize the chart to identify continuation entrance setups. Now let's hop on over into the scan tab and we can begin to build some scanners to help find these setups, because it doesn't matter how good your setups are if you can't find the types of stocks currently aligning with them. What we're going to do for step 2 of this video is build 3 scanners to match and find the 3 chart setups that I just mentioned, and we'll even lean into step 3 by building a scanner for the fundamental setup that we're going to talk about later in this video. So for all of my scanners, I'm going to have these 2 stock filters turned on: the mark, or else the current price of the ticker, minimum of $1. Just don't show me any penny stocks. I don't want to trade any over-the-counter stuff or anything like that. Also, the volume must be at least 1 million shares traded on the day. I don't want to try to trade any low liquidity type noise. So the first chart setup that we covered was the percent change indicator based off of the opening price being greater than 5 for 3 consecutive bars. So what I'm going to do, I'm going to add another filter, this time being of the study type, and into the edit pencil here, let's actually use the condition wizard for this one. I'm going to hop into edit, and here in the top left, I'm going to find the study, and we're going to look up the percent change study. Let's actually go percent CHG being what it's called. We will go offset 0 for this one, meaning the current bar needs to be greater than 5 as well. And we'll go ahead and set our price parameter here rather than the default of close, which would be that the close of today's candle is at least 5% greater than the close of 14 candles ago. We want to go with open. And I do that just because the close is always going to change, right? The close of today's bar will always be changing throughout the day. I only want to see stocks that I know I'm going to buy based on static information, being the open of today's bar, which obviously won't change anymore. So I know if a stock is on this scanner, it matches my setups, and it will match my setups into the close of today where I would enter the trade. So we're going to say is greater than, and we're going to go with condition of value, and we just have to say that it is greater than 5. That's it. We can go ahead and save this, and we can go ahead and add another condition. And you probably can catch on to what we're going to do by now. We're going to go percent change again, and this time we're going to set it up exactly the same, except we're going to offset it by 1, meaning that yesterday's bar, based off of the opening of the percent change indicator, is greater than a value of 5. And I will do the same thing again with an offset of 2 for the third one, if I can do it quickly here, all in one clip without messing up what I'm saying. Why is this not loading? Did I click on the wrong thing? Study, please. Percent change of 2 bars ago in the opening, based off of the opening price, is greater than value of 5. If I go ahead now and run this scanner, we should now only see stocks in which the percent change indicator based off of the opening value has been greater than 5 for 3 consecutive bars, which would match the entrance criteria for that trading setup that I showcased at the very beginning of today's video. And the first stock being returned on this scanner, as we sorted ascending top down by volume, is Nvidia. Unsurprising, Nvidia is an absolute beast. Not surprised to see that it is showing up on a continuation scanner. So I'm going to go ahead and load in my workspace here for my swing trading large cap trading strategy. I love these workspaces. All you need to do is load them in, and it loads in all the strategies, the studies. It even has your active trader window all set up, all saved, all ready to go once you open it. I have these workspaces, including this one and a handful of others, available over on my website as well. So all you need to do is load these in, and when you open them, everything is set up for you and ready to go. But as we take a look at the Nvidia daily chart here, we can see this percent change study down here. If I go ahead and blow it up just to make it a little easier, has been over 5 for at least 3 consecutive bars. If not, it's been like 10, 11, 12 consecutive bars, the percent change based off of the opening price has been over 5 on Nvidia. So not so surprising to see. However, I will say that slightly annoyingly, right? Like Nvidia, the strategy has been in Nvidia since 109 because that was the first time that Nvidia got 3 consecutive bars in a row with the percent change indicator over 5. So the strategy is already up over 50%. Wow, over 50% in this trade over the last 50 trading bars. So the strategy is already in, right? So that sort of makes the scanner not amazing. Like I kind of don't care to see stocks that are just strong for the sake of being strong. I only want to see stocks that are having their first 3 consecutive bars in a row right now so that potentially it is an entrance opportunity. So to fix that, what we can do is we can hop back into our condition wizard. Let's add in now another condition. And once again, of the study of the percent change study, this time we'll turn the offset to from 3 bars ago based off of the opening price. But this time we're going to go with is less than 5. So now, yes, the last 3 bars must be greater than 5, but also 4 bars ago must be less than 5 so that we are just now getting the setup for entrance, right? So we go from like 200 results down to now just 25, and the top stock is STLA. Go ahead and load in STLA, and as you can see, STLA has just entered a trade because it just got 3 bars in a row where the percent change is greater than 5. So in this way, we are only seeing stocks in which the entrance opportunity is true now rather than just like we saw on Nvidia that the stock is just super strong. I just want to see where it is being strong, attempting to bounce right now rather than like Nvidia looked like where it was just running and running forever and already up over 50% in an open trade currently. The second chart setup we covered in step number 1 was simply to check that the current price is greater than the 200 length simple moving average. This one is also easy to create solely as an actual scanner, but I'm also going to show you how to create a custom column so that you can find the strongest stocks based off of this condition. So let's come into our study filter once again, into the pencil icon, and at the top into the ThinkScript editor. This time on the left-hand side, we are going to add price, and we will add the closing price. Close in Thinkorswim also represents the current price of an open candle. So this is really looking at the current price if we leave the offset to 0, which we will, and let's say, of course, that it's greater than, and this time on the right side, we will obviously go with study, simple moving average, and we need to make sure we set our length parameter to 200. Now, I will only see stocks returned on the scanner that are currently trading above their 200 length simple moving average. That's great. Let's also build a custom column so that we can sort our results by the stocks that are the furthest above their 200 length simple moving average, the strongest stocks according to their 200 SMA. So I'm going to come into this little cog icon to the far right of my scan column headers, into customize, and I'm going to look up a column named custom. You can add any of your available custom columns to your chart. That will give you this scroll icon that's available. If you click into this, and this time we're going to hop into the ThinkScript editor, we're going to get to work on building out a custom ThinkScript quote to find the percent difference from the current price and the 200 length simple moving average. The percent difference equation, very simple. New value minus original value, all divided by original value, and then of course the whole thing multiplied by 100 to make it a percent. So our new value is the current price of the ticker, which, as I already mentioned, can be represented by close within Thinkorswim. So simply leave close there. That will be there by default when you load up the custom quote formula for a custom column. Now we need to, from this, subtract the original value, which is the simple moving average. In Thinkorswim, that function is named simple moving AVG. Open parentheses, we need to set the length parameter, set equal to 200, close parentheses. That's our numerator. That's it. Let's go ahead and wrap this entire thing in parentheses so that it is grouped together as our numerator. And let's divide once again by that original value of the 200 length simple moving average. Let's wrap this entire equation in parentheses so that the entire thing can be multiplied by 100 to show us the percent change from the current price away from the 200 length simple moving average. And guess what? Within custom columns as well, you can run this on any time frame. If you, instead of the daily, wanted to see which stocks were the most above their 200 simple moving average on the 5-minute, you would change it simply from this drop down here. I'm going to leave it on the daily for now. Just wanted to make you aware of that. Hit apply, hit OK. Make sure, of course, it's running in your current set and hit OK. Now, if we double click on this column name, it will, as it loads in here, now be showing us the stocks that are the highest above their 200 length simple moving average returned at the top of our results here. So I can see here that stock ticker SY is currently apparently 300% above its 200 length simple moving average. So let me load in my background here. Let's look up SY and let's go ahead and turn on, of course, from the studies, the 200 length simple moving average, just so we can confirm, although I can kind of tell from that the way it's flying in the bottom right of this chart that it is indeed up a ton. And as you can see, it is indeed up a ton. The 200 length simple moving average is $1.04. The current price of this ticker is $4.23. And I hear you. Immediately I hear you. Well, Trey, there's no way in hell I'm going to go buy something that's up 300% away from its 200 simple moving average. Like, why would I want a column like this? Why would I want to see super stretched stocks? Two things. One, SY would have been at the top of these results when it was trading here at $3 as well, as it was up 250% away from its 200 simple moving average. And guess what? From that price, it still went up another 60% in just 6 trading days. So there is, I'm not going to say always, but there can still be potential for continuation on these explosive stocks. And secondly, if this isn't how you want to use this custom column, then sort it the other way instead. Look at stocks that are trading the closest to their 200 simple moving average. So I can see here that DOV is trading right at its 200 length simple moving average on the daily. And it is trading right at it. It's above the 200 simple moving average, but currently trading right against it. So if you wanted to look at that instead, you can make use of this custom column, just sort it the opposite way if that's the way you wanted to go about it. So a lot of different use cases for this custom column. And of course, since we've built this as a custom column, you can now run it against any of your scanners. If I load in my, I don't know which one I want to load in here. Let's just load in the MACD scanner that I have built. I can load this in, run it, get the results from this scanner, and then I can also still have them sorted so that I see the stocks that are the highest above or the closest to their 200 length simple moving average. So you can run the custom column against any scanner, adding to its power. Our third and final chart setup, remember, was this price action where we referenced the highest high value out of the last 10 bars and then found the lowest value of that out of the last 20. So all we need to do is we need to copy this code that we pasted into here, or that we created rather, in this study. Back over in our scan tab, let's go ahead. I've gone ahead and messed up sort of my scanner here by loading in that other, but all we need to do now is we need to add a study filter. This time into the pencil, we are going to hop into the ThinkScript editor and we are going to paste in that code, yet we need to add a comparison, right? Because we need to see that the current price is greater than this line that we are plotting on our chart. Go ahead and run this scanner. Let's sort it ascending top down by volume rather than that custom column. We will see now stocks that are above this line. If we wanted to also, just like we built the custom column that showed us the percent change difference from the 200 length simple moving average, we could replace, remember, that original value of the 200 length simple moving average to this price action equation that we have now built. That now turns this custom column, of course, into finding stocks that are both obviously above this line and then sorting top down by finding the stocks that are currently the either, once again, you can go about it either way, either the highest above this line, or you could sort it the other way to find the stocks that are the closest to this line. There are 488 results in this scan, so it's taken a second for it all to load in. But I do see a stock here, I believe that is VOR, that apparently is 864% above its highest high value out of the last 10 bars, offset by finding the lowest value of that out of the last 20. If I turn on that study, which I believe is this one, we can see here that value is 24 cents. The stock is currently trading at $2.32. Once again, much like the other stock that we looked at with the 200 simple moving average, would have been at the top of your results here when it was trading at $1.60 as well, before it made another 100% move up to over $3.20, just showing you the power of a custom column like this and utilizing these price action setups both on the chart and now within the scan. But it's time to move on to step number 3 of identifying good entrance criteria for continuation trading strategies. This one being of a fundamental type rather than having to do anything with on the chart or anything like that, getting into the actual fundamental values of the company itself. Nvidia is the strongest stock in the stock market right now, and potentially like ever, in the sense of large company with longevity in its move. It just recently became the first company to cross a $4 trillion market cap, blah, blah, blah. I just want you to take a look here at this chart for Nvidia, and specifically this third bottom chart down here, which represents the price to earnings ratio of the company. And specifically, I want you to take a look at this spike here when the price to earnings ratio of Nvidia in mid 2023 jumped up to 147 points. The stock is trading 147 times higher than its earnings. I have very vivid memories of this a little over 2 years ago now, and on the internet and specifically Twitter, which is where I frequent, people were losing their minds, saying the stock is ridiculously overvalued, calling out anybody that was buying Nvidia, calling them idiots, this, that, and the other. Well, guess what? That was right before the earnings per share began to skyrocket, and subsequently, obviously, also the price of the ticker also began to skyrocket. Now let's move over to another stock that was at one point ridiculously strong, Tesla. It's still strong. I'm not saying Tesla's not strong, but it had its own rocket ship blast off moment in 2020. Once again, look at the price to earnings ratio. I mean, let's even go before it really goes berserk. But here, when Tesla begins to make its move, it's when it first crosses into profitability. That's why you see the price to earnings ratio like 0.0000 rocket ship, because if the company's not making money, it can't have a price to earnings ratio. You can't divide by 0, right? So its first profitable quarter, the price to earnings ratio of Tesla, 512 points. Guys, the company is trading 512 times higher than its earnings. Every beginner investor, beginner trader would tell you that's ridiculous, the stock is overvalued, you shouldn't buy that, blah, blah, blah. Remember, the theme of this video is continuation trading. Buy high, sell higher. We are essentially looking to buy into this kind of strength, but at the same time, you don't just want to be like randomly chasing shit. You can't just like go buy everything that's strong. You need to find good, valuable ways to enter, which is what we're talking about in today's video. But take a look at Tesla after this spike to 512 PE ratio. The price then jumped from $79. You once again get the subsequent huge move in earnings and obviously the subsequent huge move in stock price. Luckily for us, Thinkorswim also has a way that we can scan for fundamental setups like a high price to earnings ratio. If I come back into my ad filter here in the top right and I go into this time the fundamental filter type, that is going to give us a drop down of course, these fundamental filters, one of which being price to earnings ratio. And I can set the minimum to anything you want to. Go with any number here you would like. With default, I'm going to go with 100. So I'm now only seeing stocks that are trading 100 times their earnings. The kind of companies that the market is expecting the earnings to catch up on, because that's what's happening, right? When a stock has a really high price to earnings ratio, that is the market going, hey, we expect the earnings of this thing are going to go up. Because remember, the job of the market is not to value what the company is doing right now. If that was the sole job of the market, this would all be really easy. You could just look at the value of the company, decide if it's under or overvalued, and decide whether to buy or to sell. This would all be very simple. And unfortunately, a lot of beginner investors look at it that way. But that's maybe it's a very, very small portion of the job of the market. The vast majority of the market's job is to predict where a stock is going, be it next week, next month, next year, 5, 10, 20 years from now. That is the job of the market. And that is what the price to earnings ratio is telling you. When you have a really high one, that's the market going. We expect rapid earnings growth, much like you saw on Nvidia and Tesla. They got their huge price to earnings ratio spikes. And then after that, you saw the EPS and subsequently the stock price fly alongside it. Now, we're going to add one more filter to this as well, because yes, there are also a lot of situations, and you guys are probably thinking of some in your head, where there are companies that just get kind of ridiculous pumps out of nowhere, not like based off of any real fundamental news or being a strong company or anything like that. They just get stupid pumps, and you're like, Trey, I don't want to go chase those stupid pumps. So let's add one more fundamental filter. This time I'm going to look at the sales per share. And instead of just the current sales per share, I'm going to look at the year over year percent difference in the sales per share. And I'm going to set this to a minimum of 10, meaning that the sales per share, so the amount of money that the company makes per available share, is increasing year over year by at least 10%. So essentially now we are looking at companies that the market is expecting the earnings to grow on, and they are actually selling more every year. Like they actually have some real fundamental basis behind that as well. They're not just getting random price spikes and you're going and chasing that. So Tesla, we've already looked at. Palantir is another example. So if I hop back into my web page here and I look up Palantir, obviously a lot of you guys will know Palantir. This is the retail darling right now, and for good reason. I mean, Palantir is a beast. Once again, look at the price to earnings ratio story of this company. When the company begins to make money, its first price to earnings ratio, 228.5 points. Trading over 228 times what the company is making. Beginner investors, oh my God, it's overvalued. I would never buy that. What does it do? That is the market saying we expect growth in this company. You see the EPS growth over time. We go from 7 cents to 4 quarters later, a year later being 17 cents, more than doubles. The price also alongside it almost more than doubles. Earnings per share has now jumped up to 23 cents. The price to earnings ratio has remained high, but especially on that first price to earnings ratio spike gives you a chance to get in at $16, whereas the stock is now trading nearly 10x that at $142 a share. And if I go ahead and hop over to the price to sales ratio here, by the way, I'm looking at Macro Trends. That's the website. It's called macrotrends.net. I am not at all affiliated with the site. I don't know the owner, anything like that. I just love the website for this information it provides. But you can see here now the sales per share, that being our second filter that we added. Hey, the sales per share must also be growing, right? Like the company must also be actually fundamentally growing too, not just some random price spike crap. You can obviously see that the sales per share year over year on, this is quarter over quarter, but you could tell year over year as well on Palantir is growing very steadily. So you have that real sort of backbone of proof as well alongside the market expectations. So you now know how to find good continuation entrant setups based on chart conditions, based on a fundamental condition, and you have all the scanners readily available to you to help find these setups. And remember, if you're interested in any of the codes you've seen in today's video, they, alongside over 150 other custom thinkorswim codes, are all available over on my website, daytradingstrategies.net, linked in the description down below. So go click on that link, at least take advantage of the free codes. There's free ones over there. At least go do that and read the reviews and decide for yourself if it's something that you think could help accelerate your day trading journey. And if it is, click and get signed up today. With all that being said, that's going to go ahead and do it for this video, and I'll catch you all in the next one. Thanks for watching.